Good morning, it's Tuesday the 7th of March. This is the Phoenix Blue update brought to you this morning by Tom Colley. Yesterday a very quiet day, very little movement in the markets. Any opportunity that was there was certainly intraday and even then on the smaller time frames. So predominantly here at Phoenix Blue we stayed away. We're waiting really for events later in the week to start the markets moving. Potentially a relatively quiet day again today. Not a lot of news for the day ahead. We have, however, already had at 3:30 this morning UK time, we had the RBA holding the Australian rate at the same 1.5 level. Some of the comments that were made by Governor Lowe were the unchanged policy is consistent with growth and inflation targets. Headline inflation to pick up over the course of 2017, and US rates expected to rise, but no further expectation of a deeper easing by other economies. So nothing really very special or unusual there, although I have to say I was expecting it to be slightly more of a dovish statement than that. So we have seen a bit of a bounce on the Aussie overnight. We'll have a look at that chart in a moment. What we have going forward for the news today, we've got trade balance for the Canadian dollar at 130. We've got the GDT, the dairy price index for the Kiwi, which usually comes out after lunch but doesn't have a specific time. And then overnight, one to watch out for, particularly for Aussie traders, is the Chinese trade balance, which again is tentative, but will probably come out early hours of the morning. Okay, so over to the charts. There's not a huge amount to look at because yesterday was a very quiet day. After our bearish day on the dollar index on Friday, we had more of a bullish day yesterday. We didn't recover, well, we recovered about half of our losses, or the losses, not our losses, but the losses that the dollar index experienced on Friday. Still watching this key level of around 102 as we're looking for a break to the high side in confirmation of dollar strength, or to the low side we're looking around this level about 100.050 for support, certainly to maintain dollar strength, if not quite as aggressively. Over on the yen, well, we had a very much where we'll finish where we started day yesterday. We are looking at a couple of intraday levels that you can see through there, but again we're looking for dollar strength to push this through the 114s towards 115 and above to confirm that, and also that would likely confirm a risk-on scenario. The American stock exchanges are have pulled back yesterday. Both the S&P and the Dow are back at potential levels, support levels. So if we see the stock exchanges, equities playing out to the long side, that will give us a risk-on scenario, and would expect the yen to weaken in that respect. That would also correlate obviously with the Nikkei for exactly the same reasons. You'll see in a few slides further on, we're also looking at gold on the basis or if the risk on scenario does come into effect. Over on the euro, are very much the opposite of the dollar index, as we expect. We're looking I'm particularly keen on this 107 level here. That's quite aggressive. I know that I think we called the 108 as being a level in the watch list this week, but I like that level. We've got a channel, or basically two concurrent channels, and if you follow this channel, these two, they go right back to the highs of 2014 and anchor up there. So I am quite keen on that. And based on that, I'm taking a risk on that. We've got a commitment of traders extreme signal that just appeared over the weekend. We'd expect, in order for that to actually be activated, for the for the euro to move to the long side, so that would be in keeping with that. But so again, to be fair, would the 108. From my perspective, that is a high probability entry. It's a very nice level through here. And if that fails, I'd still be looking to short it from this level. So effectively, I'd be making my loss back up on the move between the two levels there. Over on the Aussie, well, here's the pullback. We were pulling back all the way through yesterday. The statement from the RBA clearly gave us a stronger push to the long side. We appear to be testing a minor level through here, and are looking for further short side in this market towards our target that you can see down here at around 0.75. We will be looking to come out of the trade at that point, simply because this level through here is so significant that it will take a major push on the part of the dollar or weakness on the Aussie to break that level. I would then be looking to get into another trade rather than holding a trade through that level. Also of interest, we know we've been watching the cross pairs since we've had a great deal of uncertainty over the recent weeks on the US dollar. We've also been looking at more technically biased trades on the cross pairs. We got into this trade right down at the bottom here a week before last. We've clearly had a close above and overnight a pullback to this support level here at 388.80. We now look for additional intraday or certainly price action entries to the long side to take it up to at least our next level, with a view to the top of the channel being our end target. Kiwi was really the weakest currency again yesterday. We're coming into this level around 6980 at this moment in time. That's in conjunction with this trend line and channel through here. So we will be looking for this market to break below this level, close below there, to retest it, to take it further to the downside. We do see this market as being weaker than the Aussie, so as long as we break below this trend line here, that will break the long-term uptrend, and we'll be looking, as I say, for a retest, take that to the short side, hopefully again playing out with dollar strength to take us down to levels potentially down this sort of 6.67 level down here. I mentioned risk on and gold. Well, we've had gold rising until the last week or 10 days. We've now had a significant pullback. We've got a key level through here at 1220. We've already had a rising wedge, which would be that line there and that one there. We've had that break and retest. There was an intraday trading opportunity there, which I personally didn't take because of this significant level here. Now looking for a break of this level, that would effectively also be a break of this channel through here that I'm anticipating would form on that level. If it doesn't break that level, then a pullback through to this level around the 1240 level through here would give us a potential of a head and shoulders trade to the downside, looking to target the 1170s through here. So again, that's an opportunity that would potentially play out if we get the stock markets moving back into bullish mode. They have only been pulling back yesterday. It may take the news through the week to make that happen, but that would be a way we could take advantage of that. We are already short silver, but we're short for a different reason on silver. We're short silver because we've had a commitment of traders, extreme signal as a high, and we haven't got that on gold. So we're relying on the fundamentals there that I've just mentioned to give us direction on that one. On the gold trade, the commitment of traders and seasonality, it gives us a better picture on that. I'm not showing that today because it didn't really move much yesterday, but we will keep you abreast of that one through the week as we go forward. Okay guys, reminder, next Wednesday, March the 15th in London, free trading. an afternoon to trade alongside the Phoenix Blue fund managers. You'll get a link on here in a moment which will allow you to go to the website and contact us about that. Also, anybody interested in an all-day event in Sweden on Saturday the 11th of March, that's this coming Saturday, again contact us through the website. Okay guys, so again anticipating a relatively quiet day. We've got the ECB coming tomorrow, I believe. No, sorry, ECB is Wednesday. We've got the annual budget release from the UK tomorrow. So we may start seeing a little bit more action in the markets for the latter part of the week. Okay, thanks for listening, and we'll speak to you again tomorrow.